All right, are you ready to get pissed off at Massachusetts again? Because this lovely state is about to screw you again. If you're an out-of-state homeowner here in Massachusetts, or you live here and are thinking about moving out of state, you are going to want to hear this. Starting November 1st of this year, 2025, the Commonwealth is rolling out a brand new law that's going to affect at least half of you homeowners when you decide to sell. Let's share a quick story to help actually explain what is happening. Welcome to Let's Get Frank About Real Estate. I'm Frank McManus with Coldwell Banker, and this could be a game changer for you future sellers both in and out of state. So let's meet Kat and Bob. They've lived in Massachusetts for 20 years. They've raised a family and have decided to sell their home for $1.2 million so they can move south and enjoy warm winters, and everything was going swimmingly until closing day. That's when they were hit with an unwanted $48,000 surprise on the closing statement of a 4% holdback from the proceeds of the sale. Yep, the state held 4% of the sale price before they got their check. Now let's be clear, this is not considered a new tax. It's defined as a withholding, essentially a prepayment of any capital gains tax that the state thinks you might owe. But they say you will get a credit for when you file your state tax return. And if you don't plan ahead, that's tens of thousands of dollars that will be tied up for months unnecessarily. So who does this apply to? I'm so glad you asked. Any sale of real estate with the gross sale of a price of $1 million or more. Non-residents who own property, part-time residents who own property, and full-time residents who are moving out of state. It also applies to not only individuals, but also trusts and some business entities unless they're exempt. And why is the state doing this? Because it's Massachusetts and they like to grab every dollar they can out of your pocket. However, when you ask the state, they would say it's because when someone sells their property and is no longer living here, it's hard for them to track them down to pay taxes. So the DOR said, let's just hold 4% at closing. What you can expect at closing is that the closing attorney is required to withhold 4% of the gross price. That money will then be sent to the DOR within 10 days, which means the money will sit there until you and your accountant file your state return and figure out exactly what's owed. And then you can later claim a credit for what's withheld if you end up owing less, which could take months to receive. So here are some ideas to help you prepare ahead of time. Talk to a knowledgeable realtor and real estate attorney before you go to market. Plan for this 4% holdback if your property will fetch more than $1 million, as this will affect your bottom line and possibly purchase of your next house. Get professional tax advice, as there are some exemptions which could reduce your exposure. So the bottom line is, if you're planning to sell a property for $1 million or more, you need to talk to a realtor, an attorney, and a CPA before you do anything, as you don't want surprises like Kat and Bob received at the closing table when you're counting on that money for your next move. So plan ahead, plan smart, and you'll keep more of your hard-earned equity. Now, if you have any questions or want to know more, leave a comment below or email me at frank.mcmanus@cbrealty.com. As always, I hope this helps you. And for over 385 more videos like this with tips on all things real estate, please go ahead and like, follow, share, and subscribe to any of my social media pages. I thank you so much for watching, and until next